commentary for Friday, the 4th of October 2019, the first Friday of the month, and we all know what that means. US non-farm payroll data. Not much to report prior to the number actually being released, but it does get released against the backdrop of two very weak ISM numbers over the past couple of days. As we've seen, equities have suffered all week. They did bounce back a little bit yesterday on Thursday, and belief that poor data will mean more rate cuts. Not sure that's necessarily a good reason for them to bounce back, but bounce back they did. So prior to the data, we had euro dollar sitting at 109.80, dollar yen at 107.75, and cable 123.10, gold at 15.06, and we had equity futures all sitting in the red, with the Dow Jones showing lower by 70 points. So what did we actually get? Well, the headline number came in at plus 136,000, which was just marginally lower than the expected. Market was looking for 140,000, so negligible. But it was an upper revision to last month's number. The surprise in all the data really was a reduction in the unemployment rate down to 3.5%, which is the lowest level in the US for 50 years. So how did the markets react? Well, in short, with relief. It was what we refer to probably as a Goldilocks number. No one wanted to see another weak number this week. Equity futures rallied, with the Dow Jones futures turning to plus 60 very quickly. Dollar yen bounced up to a high of 107.13, and euro dropped down to 109.57. Gold actually initially rallied up to 15.15, but then slid lower down to 14.96 as the risk sentiment turned. US equities open up as we mentioned, and the Dow is immediately up 150 points. There's a comment from Trump advisor Kudlow that there could be some positive surprises from next week's trade talks with China, which is largely ignored. I think the markets are a little weary of rhetoric from the Trump administration. However, as the day progresses, equities start to get ahead of steam, and by the close, the Dow Jones is up by over 1.4%, or 372 points. The S&P and Nasdaq make similar gains. For FX, though, very much a muted affair. You might have expected to have seen a bit more action than we actually got, especially for the dollar, maybe strengthening a bit, dollar yen particularly, but wasn't the case. Euro closed 109.80, exactly where it was before the number came out, and dollar yen we had at 106.90. Gold slips lower, but does hold above 1,500 to close at 15.0350. And a quick look at our beloved crypto ends the week on a sour note as the weekend sellers appear. Bitcoin slipping back down to 78.75, and Ethereum back to 169. To conclude, it's been quite the roller coaster week for equities, but today's NFP number was sort of the Goldilocks number that the market really needed, good enough to tell us that there's still growth in the labour market, but not too strong that people start saying, oh, maybe that's too strong, the Fed won't cut rates any further. So the market got what it needed, at least for today. So with that, just want to take a quick look at an S&P chart, really. Mixed data and the roller coaster of equities this week have really been the main drivers for FX. So much so, today was it was a weird day for FX. It just kind of sort of sat there and spectated, even as equities rallied back. So I just wanted to take a quick look at this. We've been generally rallying. US equities have been rallying since the lows we saw in December of last year, and we also had quite a sharp spike higher in January, and then it's been a little bit more sort of a trend line, and we've got a strong trend line here coming from the middle of January. We've touched this big dip here, and thus far we have these dips we had back in August, where we had quite a up and down time here, and then obviously we had the big sell-off this week, which again held, and we bounced back up to this 29.50 level at the close on Friday. What I've drawn here is we made this high in July, just shy of 30.30, and obviously this trend line here. So going forward, From an equity perspective, I personally like to look at the S&P more than the Dow Jones, just because it obviously has more components. These appear to be the two levels, really. The top side, this resistance level here, and then to the downside, this line I've drawn here. Any breakthrough there may concern a little bit. So we'll have to wait and see. Technicals aside, though, I think one has to admire the equity market's resilience despite all the politics, the trade wars, the impeachments, the investigations, all the rhetoric that's coming out of Washington. It has been a fairly impressive year, and even though President Trump has constantly reminded us that the Fed is doing a terrible job and interest rates should be a lot lower, equities really have remained pretty resilient in the face of all that. So should be an interesting last quarter of the year. And with that, I wish you all the very best of luck in the coming week, and looks forward to speaking with you soon. Cheers.